Hey everybody, welcome back. Now the markets have generally been a bit down lately, but there are a certain selection of very exciting tokens, so I am looking specifically at these 5 here, that have really bucked against the trend and blasted away, right? So if we start off with Avalanche, the AVAX price has exploded 60% in less than a week on the news of a strategic partnership with one of the largest consultancies in the world. So Ava Labs and Deloitte, they're going to be working together to develop blockchain systems that's going to help the government manage disaster payments. Very cool use case. It's kind of on a similar vein to what Cardano is doing in Africa. And you know, this sort of public-private enterprise is only going to help governments see the value and innovative potential behind blockchain and cryptocurrencies, not just a threat that needs regulation. Now, I covered Avalanche in detail in another video, which I'll link down below. Next up is Crypto.com, which is up a mighty 400% in mere weeks after signing a $700 million deal to rename the Staples Center, right? So that's the home of the LA Lakers basketball team. They're going to rename it to Crypto.com Arena. And that's also on the back of recruiting Matt Damon for a $100 million marketing campaign. So a lot of recent big news coming out of Crypto.com. Now we've also got Decentraland and the Sandbox that have both blasted off into space recently in the wake of all the hype about the metaverse. Now I have a separate video on how to invest in the metaverse, which I'll also link down below. Now what I really want to focus on today is Elrond, which is one of these up and coming layer 1s, really promising up and coming layer 1s that's not quite as well known as the big boys like Cardano, Polkadot, Solana and Avalanche. Now the price of Elrond's native token EGLD has exploded due to the launch of its flagship decentralized exchange, right, Maiar, and what might be the largest DeFi incentive program in history. Proudly announced on the same day the Maiar mainnet went live. $1.3 billion to drive liquidity onto the brand new platform. Now this dwarfs Polygon's program with Aave and Curve earlier in the year, and it even dwarfs Avalanche's $180 million Avalanche Rush initiative announced a few months ago. Now in this video we're going to cover 4 things. Number 1, the types of pumps we often see surrounding important cryptocurrency updates, right? So this dictates how traders and investors might want to behave. And we're going to look at examples comparing Cardano, Ethereum, and Elrond. Number 2, why EGLD's price has been pumping so damn hard. Number 3, how to use Elrond's new decentralized exchange, right, Maiar, to make strong passive income. And finally, number 4, what all of this means for EGLD's short-term price action. Now, this video should be quite interesting to both the traders and the DeFi fans alike. All right, if this sounds interesting to you, I'd appreciate a like and a subscribe. And without further ado, let's dive on in. Okie dokie, starting off now, let's look at 2 types of cryptocurrency pumps often surrounding important updates. So firstly, we have the good old-fashioned testnet pump followed by a mainnet correction. So Cardano is a great example of this. We see major rallies in ADA before important hard forks followed by pretty decent sized corrections. Right now I discussed this in quite a bit of detail in my latest Cardano video. I'll link that down below. Secondly, we can have a post-launch pumping price, which happens due to some new tangible benefit or utility being introduced to the token. Now, both of these pumps can happen, or maybe just one of them. So looking at Cardano, we only saw a testnet pump for example, the Alonzo hard fork, because even though smart contracts was being introduced and was now already very bullish, the DeFi ecosystem wasn't. So there wasn't an immediate need for lots of people to start buying up ADA immediately. Now, if we turn our attention to Ethereum, we actually saw a double pump for Ether surrounding the London hard fork upgrade. So ETH prices, they pumped during the testnet phase, and it continued pumping after the London hard fork mainnet went live, mainly thanks to the EIP 1559 part of the hard fork, right? So this introduced a regular burning mechanism to Ethereum for the first time, which is very bullish for long-term hodlers. Now for Elrond, they've had a double good pump as well, right? A steady testnet rally followed by prices actually absolutely exploding after Maiar went live, right? A lot of it thanks to the $1.3 billion incentive scheme. So make no mistake, this is Elrond's own Uniswap or Pancake Swap moment, and they've hit the ground running by driving up adoption on day 1 on a massive level. Really awesome. Now the key message here is the type of pump that we see is going to have consequences to how you might trade or invest. So if we look at testnet rallies, so testnet only rallies, say for Cardano, for ADA, you got in at the beginning of the testnet, buy the testnet, take profits, sell the mainnet. right? If you know that this was going to happen. On the other hand, if we look at something like Elrond, where we know there's going to be things driving up the prices even after the mainnet launch, if you got in at the beginning of the testnet, you might want to take some profits at the mainnet launch, but you want to ride the majority of your trade all the way through like this. Okay, so now I want to talk about why EGLD's price has been pumping so hard after the DEX launch and how to get in on the action. So the simple answer is, well, there is a huge loot of incentives for stakers and farmers. $1.3 billion over the next year, right? $200 million alone in the first month. So Elrond certainly knows how to drive mass adoption. So as a result, we're seeing people buying up EGLD in droves so they can earn very strong passive income in the farms on Maiar. Now we're talking about over 10,000% APY for these staking pools. Now at 10,000% APY, you're looking at around 1.2 to 1.3% daily returns. It's not 10,000 divided by 365 because of the way compounding works. Now I've talked about the mathematical relationship between APYs and daily returns and how it affects passive income strategies in both an article and a video, which I'll link down below. Alright, so let's talk a bit about the Maiar DEX, right? So if you've used Uniswap or PancakeSwap before, you're going to feel right at home. So firstly, we can swap tokens, right? That's the centerpiece of any exchange. And right now, if we look at which pairs are available for swapping, if I go to liquidity, go to active pools, right? So we have two pairs, right? So right now we can exchange EGLD for MEX and vice versa. So MEX is Maiar's new governance token. It's a brand new token, and it's also going to be the reward token for staking, as we'll see shortly, right? For the farming section. You can also swap EGLD for USDC stablecoin and vice versa, right? So two trading pairs. Now we also have a place to add liquidity. Again, AMM DEXs, they rely on capital that's being contributed by its users like you and I. And that's actually part of the reason why the rewards are so high right now in the farming section, right? Such high rewards right now because the Elrond team, they need pioneering users like you and I to fill up its new liquidity pools with tokens with which others can trade with. Okay, and then we've got, we got the farm section where you can stake your LP tokens from providing liquidity over here. So after you've provided liquidity, you can then stake the LP tokens over here. Now, just to be clear, this is a single asset staking pool, right? Because you're only staking one asset, which is MEX, right? This is the less risky way to do staking. And then you have dual asset staking, right? Because essentially your rewards are coming from having contributed a pair of assets, right? Namely EGLD and MEX, or EGLD and USDC. Now, dual asset staking is also more high reward and high risk, right? So high reward because you earn actually two sources of passive income, right? You earn trading fees from having contributed liquidity over here. And secondly, we earn very high staking rewards. So if I go back to farms, we earn very high staking rewards, right? From staking the LP tokens that you got from contributing your liquidity, right? So high reward. And it's high risk because of something called impermanent loss, which is partly why the returns are so high to help offset that. All right, so let's go through an example in more detail. Let's say I want to join this LP pool here, right, and earn a ridiculous return, right, on both EGLD and MEX. So first things first, I need to add some EGLD and MEX into the liquidity pool here. I don't have any EGLD or MEX right now. So what I can do is I can go to an exchange. This is the spot wallet on my Binance account. And I can say buy some EGLD, right? And once you have some EGLD on the exchange, you can then transfer it to either your Elrond wallet, right? Or you can open up a wallet on the new Maiar app. They are both easy to do and very quick. Then I'll connect my wallet to Maiar, and immediately I should swap some of my EGLD to MEX because I want to contribute a EGLD MEX liquidity pair. So specifically, I want an equal amount of EGLD and MEX so that I can form a 50-50 liquidity pair. So if I move two EGLD over, what I really should do is swap one of them for MEX tokens, right? So one, and then an equivalent number of MEXs, and it will tell you how many you're going to get, and you make that swap. Now, once you've added that pair to the liquidity pool, you're going to earn your first source of passive income, which is the trading fees, right? So whenever people trade EGLD for MEX or vice versa, you're going to get a share of the fees. Fantastic. Now, at the same time, adding liquidity into the pool, it's going to result in you getting some EGLD MEX LP tokens, liquidity pool tokens in return, which you can then think of as proof of your contribution into the pool. And the great thing about these LP tokens is you can go stake them because they're just another cryptocurrency, right? You can stake them in these pools here, these LP pools in the farm section. That's how it works. I'll then get my regular rewards paid out in MEX tokens, which I can either cash out completely to buy lunch, for instance, or I can stake it in the single asset staking pool to grow my MEX bag, or I can contribute them back into these LP pool and thus grow 2 assets at the same time. It's all up to you. Alright, now just a few things I'll mention. So firstly, please be aware of the impermanent loss risks staking volatile pairs. So for instance, if EGLD doubles in price, but MEX goes up 10 times, and then you cash out, well, you're going to have been better off staking EGLD and MEX separately. Now, as a general rule of thumb, impermanent loss is pretty small, less than 2%, provided the relative prices of your pair don't fluctuate beyond 50%. Secondly, see this 10,000% APY. Now keep in mind the notion of an APY assumes that you are regularly compounding your rewards. If you park your money in these pools and then log off and then don't come back for another year, your return will actually be the APR, not the APY. Now 2,000% still very impressive, I might add, but it's not going to be the APY unless you are compounding these rewards. Now APYs are therefore particularly useful for auto compounding pools. Now these pools are not auto compound. You do need to regularly harvest your rewards and then compound them yourself. Finally, if you're new to DeFi, then perhaps I've thrown you a bit into the deep end regarding LP pools, impermanent loss, farming, and so forth. I would suggest checking out my longer Binance Smart Chain staking and farming video where I discuss all of these ideas above in much more detail using good old PancakeSwap as an example. Or maybe if you'd like me to do a longer walkthrough on Maiar, please let me know down in the comment section below. Okay, so what does all of this mean for EGLD's price action coming up? Well, the first thing I'm going to assume is that Bitcoin holds steady and the altcoin dominance stays healthy. Right now, if Bitcoin completely crashes, right, market confidence crashes, and that affects the volume going into DeFi as well, including Elrond and Maiar. So assuming Bitcoin behaves, we should continue to see buy-side pressure for EGLD tokens, right? As more DeFi users onboard onto Maiar to try and make good passive income. So that's the good news. So what's the bad news? Well, as the EGLD price increases, we're going to see more sell-side pressure from, number one, the traders, and number two, the DeFi users themselves as well, right? So traders who got in on EGLD, right, down the bottom here, especially at the beginning of the testnet phase, accumulating all the way along here, and then riding this massive pump up, right, they're going to be wanting to take profits. At the same time, the APRs and APYs, the returns in the staking pools, they're likely to reduce, right? They're likely to decrease as the pools become more saturated by more users. So just a few days ago, if you think these figures are ridiculous now, they were even more ridiculous a few days ago. So as the pools become more saturated, the rewards go down, and this then changes the risk reward calculus for these DeFi users, for the farmers. Now, if the rewards dip low enough, so right now it's still 10,000% APY, very fantastic, but what if it reduces down to, say, I don't know, 500%, then you still have all the same risks like impermanent loss risks and so on. So some farmers are going to want to cash out some of their LP tokens and take profit on their EGLD, right? Especially if prices are already sky high. Okay, so in summary, we might see a couple of different scenarios coming up. In the future, EGLD might keep going up for a while longer, onboarding more DeFi users, right? Fantastic. And then the price blows off at some local top, right? We see a steep correction of some sort, and then it stabilizes at a new and higher accumulation zone, right? Higher than what it was before. All right, and that's because the launch of the Maiar DEX, right, has created real utility in hodling EGLD tokens. So there's going to be a fundamentally higher buy-side pressure, right, going forward, as DeFi users now have a good reason to buy and stake and farm EGLD to grow their wealth. So that's the first scenario, right? A local blow off top and then a correction into a higher base support level. The second scenario is that there's no blow off top, right? So instead, increasing buy side pressure, right, from new DeFi users and increasing sell side pressure at the same time, coming from perhaps diminishing staking rewards along with savvy traders taking profits. We're going to see EGLD prices reach an equilibrium of some sort, right? Stabilize at a new accumulation support zone without much of a correction, right? There's no blow off top and then massive correction and then stabilization. We just kind of edge slower and slower towards an equilibrium in a calm fashion. Now, where are some of these price targets going to be? Where are these new accumulation zones going to be? Look, I don't want to look too much into this. There are different TA experts on YouTube that'll give you different opinions. I've heard anywhere between $500 to $1,000 or more, based on a variety of different techniques. You've got Fibonacci levels and so forth. So there are many videos out there. I won't go into that, but all I will say is that a $1,000 e-gold, right? So right now we're still quite a bit off, but $1,000, that would be nice. That is only a $20 billion market cap, right? Which I think is totally reasonable, especially as Elrond adds more trading pairs into Maiar. Alright guys, I'll leave it there. Thanks for watching. I hope you found this video useful. If you did, I'd really appreciate a like and a subscribe to help me grow this channel. Now, if you are playing with Elrond, especially if you're staking Elrond assets on Maiar, I would love to hear from you, know what you think so far. Alright guys, let's leave it there. Hope you have a great day, evening, wherever you are, and I'll see you in the next one.